Hello, we're back with Julie Koska at Morningstar, and we're going to continue our discussion about investment analysis on ESG investment options. One of the big focuses on ESG investments is often on returns, but risk is also an important component. Can you talk a little bit about the role of risk and return in evaluating these options?
So ESG is just one aspect when looking at and evaluating a fund. So there's many other aspects that really should be considered when selecting a fund. You mentioned performance or return information. It's also important to look at the manager experience, as well as fees that are associated with a fund when making a selection. We've actually found some interesting information as we've started to dive deeper into our ESG research, in that many funds that perform well from an ESG perspective tend to really manifest and embody good characteristics of a fund. So they tend to have higher Morningstar analyst ratings. They tend to also have lower turnover. And of course, then as a result, tend to actually show that they have less risk associated with them because there isn't as much changing within that portfolio, because those managers are really trying to seek to have consistency across ESG as well as the other factors that they're considering when they're constructing those funds or constructing investments for their portfolio. So really overall, when you're looking at ESG, it starts to really manifest itself of looking at how you can really reduce your risk and understand what those risk opportunities are within a particular portfolio.